One of my friends who had bought the shares of Tata Capital back in April 2024 at 1125 was like, oh my god. Because he came to know about the price band of this IPO, wherein the upper price got fixed at 326. After listening to this, he had to literally say Tata to his capital. But just because he had a bad experience, does it mean that the company is bad? Answer is obviously no. If you were to have your own opinion about the company, you should do your own analysis, and this video can act as a very good kickstarter. If you feel that you know already a lot about this company, just check if you know the answers to these three questions. Number one, why is there a sudden jump in key metrics of this company from FY24 to 25? Number two, does this company look overvalued or undervalued with respect to its peers? And number three, can we expect more selling post listing? Before we move on, if you can dedicate just one weekend to upgrade your skills, I highly recommend this 2-day free AI training by Outskill, who is the partner for today's video and also world's first AI focused education platform, which is backed by top AI investors and founders. It's a live 16-hour program happening this Saturday and Sunday from 10 a.m. to 7 p.m. And though it's valued at 10,000 rupees, you'll get it absolutely free because you are a part of our community. You'll learn something like prompt engineering, no code data analysis, and a lot more. Over 1 lakh professionals from 40 plus countries, including those in tech, sales, marketing, HR, business, have already joined this workshop. I'm getting my entire team to attend this, and you should too. Slots are filling fast, so just click the link in the description, book yours now, and don't forget to join the WhatsApp group for more updates. Also, don't forget to join the session on 10 a.m. this Saturday. As usual, let's start with what does the company do? Well, Tata Capital Ltd is the flagship financial services company of Tata Group. नाम में ही बहुत कुछ लिखा है. It's a Tata Group company. Plus, it's a flagship financial services company. So, it's an NBFC, but it's an upper layer NBFC. And what do I mean by that? Typically, these upper layer NBFCs will have stricter norms as strict as banks. Okay. And obviously, it is also registered with RBI. Because it's an NBFC, of course, one of the primary functions that it is going to do is going to be of lending. It has more than 25 lending products. So if I were to understand which lending products, let's bifurcate their business based on whom are they giving these loans to. There are three primary categories. Number one, it's retail. Number two, it's SME finance. And number three, it's corporate finance. Now, if I'm talking about retail, obviously everyone understands it could be loan against property, it could be personal loans, it could be vehicle loans, it could be home loans, whatever types of loans. Okay. SME finance for corporate. So SME finance and corporate finance, the products are going to be similar, just the scale could be different. For corporate finance, it could be something like equipment finance, supply chain finance, infrastructure finance, whatever, right? But if you were to understand what is the percentage of loans given to all these three categories, for retail, as at June 30th, 2025, 61.3% of the total loans are given to retail finance. For SME finance, it's 26.2%, and for corporate finance, it's 12.5%. But does the company give only loans? Answer is no. In addition to lending, TCL also offers third party products such as insurance, credit card, and wealth management solutions. But then I'm sure you may have this doubt in your mind that, okay, is the revenue split in favor of lending or in favor of other products like insurance, credit cards, or wealth management? For that, let's look at their revenue segment bifurcation. If I'm talking about interest income, again, as at 30th June 2025, 90.1% of their total income is nothing but interest income. Fee income is barely 7.5%, and investment income is around 2.4%. Now, let's look at the industry analysis from two major perspectives. If you remember, I told you that for the company, 90% of their total income is nothing but interest income. So, we have to try and understand what could be the expected growth in loans at an industry level, right? And number two, if you remember, I told you about the customer segmentation as well, where more than 60% of their loans are given to retail. So, we have to try and understand what could be the growth trajectory in retail loans. Okay. So, from these two perspectives, industry analysis, NBFCs overall credit grew at a CAGR of 13.2% between financial years 22 to 25, and it is expected that NBFC's assets under management could grow by 13.5% to 15% CAGR between financial years 25 to 28. So, a good one. If I'm talking about retail credit growth, the overall credit growth is expected to be strong, and it is expected that it can grow at a rate of 14 to 16% CAGR between 25 to 28. Now, if you ask me why could the retail growth be strong, reasons are the ones that you already know: a strong middle class, growing middle class population, growing urbanization, formalization of the economy, digital adoption. You know that, right? But one more important point, that if you already have been following my channel regularly, you know that we are in a cycle where interest rates are expected to fall further. And with a falling interest rate cycle, two set of industries are the ones which benefit a lot. One is banks and the other one is NBFC. And because Tata Capital is an NBFC, it could definitely get benefited with a falling rate cycle. Out of the three key questions that we are going to answer in today's video, let's focus on the first one right now, as to why is there a sudden jump in key metrics of the company from financial year 24 to 25. And for that, let's focus on some key financial pointers. If I'm talking about interest income only, look at the jump from 2024 figures to 25 figures. By the way, I'm going to keep in front of you 3 years data: 23, 24, and 25. But what you have to focus on is from 24 to 25, right? Now, if you look at this, all numbers are in millions, by the way. Interest income went up from 1,63,000 millions to 2,57,000 millions. I'm rounding off the numbers. So, this is more than 50% jump in interest income. Immediately, it should click in your mind. If interest income has jumped by 50%, has the loan book also increased by 50%? For that, if you have a look at this one, you can see that their loans also have shot up from 16 lakh rupees in million to 22 lakh 65,000 again rupees in millions. So again, here also you can see that the jump is almost 50% jump. But you'll be like, this is all financial matrices. What about KPIs, other KPIs? If you look at branches, again, see all the three pointers that you can see on the screen. 23 to 24 jump is not that big, but from 24 to 25, you can see easily the jump is way more than 50%. Number of branches gone up from 867 to 1,496. Number of employees from 19,000 to 29,000. Number of customers from 4.5 million to 7 million. मग झालं तरी काय असं? What happened because of which there was such a sudden jump? The reason is the merger between Tata Motors Finance Ltd, TMFL, with Tata Capital Ltd. Now you can imagine a separate NBFC, which is Tata Motors Finance Ltd, primarily into giving loans for commercial vehicles. They have their own branches, they have their own employees, they have their own customers. But with this scheme of arrangement, now Tata Motors Finance Ltd got clubbed up, got merged with Tata Capital Ltd, when effective date was 8th May 2025, but the appointed date was 1st of April 2024. And this is because of which we can see the jump from 24 to 25. Now, what will happen because of this? Basically, entire business of Tata Motors Finance Limited, be their assets, be it their liabilities, everything will get transferred to Tata Capital Limited. You'll be like, Arey wow, very nice. Interest income increased, loans increased, employees increased, customers increased. Fantastic. Nothing bad? Now wait. If what could go wrong? Understand. Number of loans have increased, agreed. But what if their NP is also increased? And for that, one of the parameter that we can check is stage 3 loans. Stage 3 loans basically are loans which are at the brink of becoming NPAs, right? Now, for that, if you see, have a look at this. 23 stage 3 loans ratio was 1.7%. It went down to 1.5% at 2024. And if you look at this column, XTMFL, this is excluding Tata Motors Finance Limited, it still stands at 1.5% only. But if we include the effect of Tata Motors Limited, this jumped to 1.9%. So from 1.7% to down to 1.5% and up to 1.9%. So this is the impact that we saw because of Tata Motors Finance Limited. But I hope all in all, just to wrap up the financials, revenue, EBITDA, PAT. If I were to tell you the CAGR from 23 to 25, revenue up, the CAGR basically 44.23%, EBITDA 37.46%, PAT 11.4%. All in all, not bad. Now let's move on with the second important question as to, does this company look overvalued or undervalued with respect to its peers? And for that, I'm going to actually take you to the RHP of Tata Capital. And here you can see the peer comparison section, okay? Now let's go to the key pointers here. 27.1, this point says that Tata Capital is the third largest diversified NBFC in India as of June 2025. Now, for that, if you check here Q1 FY26, the overall loan book, you can see rupees in billions stands at 2,334 billion, and you can very clearly see that it is at a third largest position as compared to all of its peers. Now, if you check one more point here, we are doing the peer comparison, and for that, if you check here, it has the highest or it has given the fastest growing branch network amongst the peers. And for that, if you can see, fastest growing, why CAGR is highest as compared to its entire peers. But if you see the overall number of branches, it's not at the topmost one. Topmost slot is by Bajaj Finance, which is at 4,192, followed by Shriram Finance, which is at 3,225. There's also one more very interesting point here, which is about the gross stage 3 loans. If you remember, stage 3 loans, I told you that the number had increased. For example, if you remember, for Tata Capital, the number had shot up to 1.9%. From 1.5, it had gone to 1.9%. But if you see Q1 FY26 number, it has further gone up to 2.1%. But then, is this like absolutely scary? Then have a look at this. Shriram Finance is at 4.5%, Chola is at 4.3, HDB is at 2.6. So, of course, lower the better. So, if you check, the best case scenario is for Bajaj Finance, which wherein gross stage 3 percentage is only 1%. So, 2.1, though it is increasing, but if you were to compare it with its peers, it's not like crazily high, right? Even PCR is not bad. As at Q1 FY26, 53.9%. In fact, it is said higher the better. The highest is for highest is for LNT. You can see here at 71%. Now let's come to one more extremely important point here, which talks about its financial profitability metrics for the company. And if you see here, key pointers I'm going to tell you: yield on advances. Let's check if Tata Capital is at number one position or not. Yield on advances, higher the better. It's not at number one. Cost of borrowing, lower the better. It's not at number one. Net interest margin, again higher the better. You can very clearly see, not at number one. Cost to income, lower the better. Again, not at number one. OPEX percentage, lower the better, 2.7%. No, again not number one. Credit cost, again lower the better. Again, not at number one. Return on asset, higher the better. In fact, it is the lowest here. ROE, return on equity, it is at 12.6%. Again, higher the better. Nowhere close to being number one. So, all in all, if you ask me, based on financial matrices, you saw it for yourself how the numbers looked like. But if I now were to check based on all these peer comparisons, if I were to check the price to book value, for this company, it stands at 4.1, whereas its peers, if you check, Bajaj Finance 6.5, but Shriram Finance is at 2. Even others, there are few others at lower than 4.10, but Chola is at 5.7, Bajaj is at 6.5. And if you were to check PE ratio, of course, for NBFCs, PB is a better one. But even if you check PE ratio, industry average is 26.6. For this company, post IPO, it will stand at 33.24. Bajaj is at 37.8. Shriram is at 12.1. And you can see for others as well. So, all in all, looking at the entire peer comparison, what do you feel, it's undervalued or overvalued? You should be able, if you're smart enough, you'll be able to guess it. But I've told you the entire 360 degrees angle, how to check for the peer comparison. Let's come up with the final question, that can we expect more selling post listing, and why is that so? Because even after listing, the promoter holding still would be at around 85%, and as per SEBI norms, if the market capitalization of such a company, of such a listed company, is more than 1 lakh crore rupees, which would be the case for Tata Capital Limited, then the 25% public shareholding must be achieved within 5 years of listing. So basically, they'll have to pull their stake down from 85% to 75% within how many years? Within 5 years of listing. So it's not like there'll be more selling right away from the from the existing shareholders of the company, or from the promoters of the company. But then, does it mean that there are no other risks? Of course there are. I'm going to tell you top 3 risks according to me. You can definitely go through the prospectus and check out for more risks if you want to go into more details. First one is asset quality. 2.1% stage 3 loans in June 2025. As I mentioned, it is in an increasing trend, but not way higher as compared to their peers. We just discussed about that. Second one is high unsecured loans. Almost 20% of their loan book is unsecured loans. And also there is a retail dependence of loans, where the exposure towards retail loans is over 60%. Now, especially for point number 2 and 3, if there is an economy slowdown, I'm sure everyone knows about the things which are happening in USA right now. If that heat is passed on to India, if there is an economic slowdown in India as well, the point numbers 2 and 3 could be kind of a risk for this company as well. If I talk about the litigations, honestly, if you check the litigations against the company, nothing much to be discussed here. So if you want, you can still go down into details, but I don't feel anything to be discussed per se. Talking about the IPO details, IPO opens on the 6th of October, closes on 8th of October, price band 310 to 326. If you see, it's a mix of fresh issue and OFS. For OFS, who is the selling shareholder? It's Tata Sons Private Limited and International Finance Corporation. If I'm talking about the fresh issue, company is mainly going to use this for tier 1 capital base. See, basically, higher the tier 1 capital base you have, it will be easier for the company for lending at later dates, right? And also they're going to use this for capital adequacy ratio. So all in all, I hope you have understood so much about the company. Let me know in the comment section whether you plan to apply for this IPO or not. If you did like the video, please don't forget to smash the like button. If you're still not subscribed to our channel, please do so. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.